We are the first stock exchange regulated as an ATS for alternative investments. For us, being able to do real estate, true alternatives, it's incredibly important, an exciting opportunity to be able to, again, create liquidity in areas where it's historically never been done. We now can help a sponsor. We have technology that helps them raise the capital, do it all electronically, manage their cap table completely electronically, manage their communications to shareholders, dividend payments, et cetera, all in one ecosystem. And if they want to be able to turn a switch on to be able to create an opportunity for liquidity, then we can flip that switch on. And it's one ecosystem, one technology, kind of an end-to-end, helping them create an environment for the full life cycle of an investor experience.
Can you tell us the story of why you founded the company?
Part of the story of why we built Lotus is effectively a stock exchange for alternative investments. We are registered as an ATS or an alternative trading system. But my parents, among a lot of other people that I knew, but my parents in particular, had exposure to some alternative investments around the time of the financial crash. They were wanting to be able to liquidate those assets and ultimately were not able to find any way to liquidate them and ultimately wound up losing everything. It turns out that the investment that they were in was a Ponzi scheme. And so my parents lost the vast majority of their net worth in a Ponzi scheme. So for me, that was a big interest to be able to create an opportunity for people to have liquidity events. That doesn't change the fact that the investment itself was a Ponzi scheme. But I also know a lot of other people who have been invested in assets 10, 15 years and have never been able to have a liquidity event. And really they're at the hands of the sponsor to be able to create that liquidity event. So for us, if, having built a stock exchange, multiple stock exchanges throughout my career, if we could create that opportunity for buyers and sellers to meet in a way that has not existed before, we knew that was really going to create an opportunity that could really change the market.
Can you explain briefly the mechanism by which you provide liquidity?
LODAS Markets helps to create liquidity by matching buyers and sellers. Our platform is all proprietary technology, but it's a marketplace where we have a lot of different types of buyers. Those buyers can be institutions, they can be family offices, they could be accredited individuals, and even we have a tremendous amount of financial advisors that are buying on behalf of their clients. And they go and they put bids on our marketplace and the products that are listed. And the sellers that are looking to find liquidity will place limit orders on the marketplace and they match. So it functions very much like a stock exchange. We are not, we're agency to every trade. So we're not the buyer, we're not the seller. We just match buyers and sellers.
Where do your sellers and buyers come from?
Our buyers and sellers are a wide range of people. I would say the most active sellers on our marketplace are coming to us through financial advisors. We do actually have a lot of individual investors that can come to us directly. They don't have to have a financial advisor representing them, but in most cases, they're coming to us through a financial advisor. And then we also have a lot of institutions that have acquired a lot of positions and they'll trade those positions across our marketplace as well. We've recently had several multi-million-dollar blocks be executed where certain financial advisory firms have acquired positions, banks have acquired positions, insurance companies, and they'll trade those across our marketplace. But also on the buy side, it's a lot of different institutions. Again, it could be insurance companies or private equity funds, hedge funds, real estate funds will be buyers on our marketplace as well. And so in many cases, we're working directly with the sponsor. The sponsor wants to make liquidity available. They haven't had a liquidity event where they're either listing on exchange or an exit where they're being bought by some other firm. So they're coming to us and saying, hey, we have a lot of sell pressure. And so if we can list our fund on your marketplace, you might be able to help us in that way. And so that's one major way that we work with helping to list new funds. Sometimes, though, it gets introduced to us by the seller. So somebody says, hey, I'm looking to sell something. Do you guys have it listed on your marketplace? If we don't, in most cases, we'll engage with the sponsor to try to get it listed. If it's a registered fund, meaning they're filing their Ks and Qs with the SEC, if they are filing with the SEC, we don't technically need permission from the sponsor to list the fund, but if it's a private fund and it has transfer restrictions, we're always wanting to work with a sponsor. I think even if it's registered, we want to. It's so much better to work with a sponsor than, let's say, against them. But in all cases, the desire is to work with them. But if there's transfer restrictions, we are always working with a sponsor.
Why does it take such a long time for the back office to process these kinds of trades?
The process for settling and clearing trades is very different from the equities market. In the equities market, you have the DTCC, which acts as a centralized clearing mechanism that helps to be able to settle trades in what used to be 3 days, and very recently was changed to single day, next day settlement. But in the alternatives world, the DTCC doesn't exist. So really what happens is it relies on legacy paper structures to be able to update who holds those shares at the transfer agent. So the transfer agent becomes a very, very key part of helping to settle those trades, moving the shareholder from one seller to a buyer. So that becomes that's a very long process because it's very manual on their end. Now, the technology that we've built is fully automated, meaning that nobody has to touch a piece of paper. We're filling out everything electronically, doing electronic signatures, but the process of actually moving those shares takes a good amount of time. Now, I will also say we are also a transfer agent for the funds that we are the transfer agent for. When there's a transaction that is executed, we have the ability to do, and we do execute and settle next day. In fact, we pride ourselves in the fact that we were next day settlement before the equities market was actually next day settlement. In the cases where we are not the transfer agent, it can typically take around 2 weeks to clear and settle a trade.
What do you do to attract both buyers and sellers to your marketplace?
Largely comes through our relationships that we've had existing through the financial advisory channels. That's a significant way. We do quite a bit of public relations. We've been in the Wall Street Journal. We've been on Bloomberg. We've been on Bloomberg TV. So a lot of media, the Financial Times has covered us. That has been a fantastic way for us to get our message out there and help people to know that we exist. On the institutional side, buyer side, a lot of that comes from my background being in the financial markets for so long. And so some of it's word of mouth, some of it is existing relationships. But then I'll also add, the closer we are to the sponsor, the better it is. Oftentimes the sponsor, in all cases, the sponsor knows who their shareholders are. So if there's people that are interested in selling, they can direct them to us and say, hey, if you're looking to sell, here's where you can do that. There's also been cases where the sponsor might be the buyer. They could buy back their own shares on our marketplace. And then there's other situations where they have institutional interest. They have outside institutions that have interest in their fund. And so they can direct those buyers to our marketplace as well. So we're kind of creating a great ecosystem of buyers and sellers and referrals across the board. But a lot of that interest today is coming from the new interest is coming from the sponsors.
What lessons did you learn from your time at BATS and the New York Stock Exchange?
Speed was very, very important. But even more important than that, I think oftentimes being able to build great technology, when you can build a technology from the ground up, it really gives an advantage to people who are looking to use looking to use your technology. It can be much more simplified. Pricing can be simplified. And so that's an advantage that we have in building the technology that we did, is we built everything proprietary. And I think being able to say that we built it proprietary, that's another major lesson that we learned at BATS. There were so many other competing exchanges that were leveraging other people's technologies. And when that other firm had technology issues, it had a trickle-down effect where therefore those other platforms, because they were leveraging somebody else's technology, were also having problems. So for us, building it all ourselves, incredibly important. Keeping pricing simple, very important. When you can give things away for free, give those things away for free to be able to build market share. And so largely, I took a lot of those things from my experience at BATS. New York Stock Exchange, very different in the sense that an amazing organization to be a part of, has a very rich, long history. And there aren't many companies in the US that are older than 200 years. And so being able to be a part of that type of a company is fantastic. So you're able to learn, and connect to institutions that, and you learn what they're looking for, what's important to them. And so yeah, I think that those are the main things that I've been able to learn and take from those experiences to build Lotus.